The ETFs WU and VTI represent only stocks listed on the US stock exchange. They don't include stocks from major international markets like Europe, Japan, China, and so on. But there's an ETF called Vanguard Total World Stock ETF or VT, which has about 10,000 stocks from both US and international markets. VT covers stocks from developed as well as emerging markets worldwide. Now let us talk about the geographical distribution. About 63% of VT is from North America, 15% from Europe, and 10% from emerging markets. And the US makes up about 61% of VT, followed by Japan, UK, Canada, and China. Looking at the top 10 companies in VT, we see that they are the same as that in the S&P 500, although with lower share of the total index. In terms of performance over the last 10 years, VT returned about 8.57%, while the S&P 500 returned 12.78%. And this reflects the fact that the US stock market performed better than the international stock market. Now, if we look at the returns over the last 50 years, the total world stock market returned about 8.5%, while the S&P 500 returned about 10.5%. So historically, the US stock market has done better than the total world stock market. But past performance does not guarantee future results, and it is hard to predict how the global economies and stock market will shape up in the next 2 to 3 decades. But if you're looking for international diversification, then VT is the ETF that offers you the exposure to the global stock market at very low cost. The expense ratio for VT is only 0.07%, which means for every $10,000 of your investment, you would only be paying $7 in annual fee to Vanguard. The dividend yield of VT is about 2.04%, slightly higher than WU. So for every $10,000 invested in VT, you can expect to receive about $200 in annual dividends. So even though VT has historically not outperformed the S&P 500, it allows you to invest in all the stocks across the globe, both emerging as well as developed market at very low cost. That's all for this video. Let me know your thoughts in the comment section below. Thank you.